Hi traders, good afternoon. Welcome to this live webinar. My name is Chris Forsick with from Elite Currency, of course. And this Wave webinar, as always, we're going to take a look at some tips and tricks about Elite Wave, price swings, price patterns in general, and basically how to combine those for better analysis, forecasting, and trading decisions in general. As I mentioned in the Telegram channel, feel free, of course, to become a SWAT member or try SWAT through the ebook. And then you can always decide to upgrade to a full member. We uploaded the Euro Dollar, Pound Dollar video analysis earlier today, of course, as well, as always. And it was a interesting last week because I was indicating a bearish potential wave 3 or C, but had a preference for wave 3. I was, I guess, lucky enough to have some news events that helped me, but otherwise, yeah, it was a great bearish breakout. So this is a perfect thing to review how we can use this SWOT information for understanding the wave and spotting that pre-fact. So that's the topic of today. I wanted to use the situation to learn from that in retrospect, and then use that information for hopefully future cases, of course, and get better at what we do as traders and as wave analysts. So let's start with taking a look at my FX, no, not my FX, but the MT4 account. So let me close this. If you have any questions, of course, obviously feel free to use the chat and get my 2 cents. Feel free to ask anything, pick my brain, shoot all the questions you want in the chat box there. All right. So very interesting situation, of course. Let's go back to last week, Monday, on the 14th of June, on the Euro Dollar. And there we go. Now, for those that are also trading ZUCA, by the way, it was a situation where the ZUCA was actually had long setups. And this can happen, of course. I mean, each EA is separate. Each system has a different vision. So just because I'm bearish with my own personal manual discretionary Elliott wave analysis doesn't mean that all our systems are going to go right away short. They have their own mechanisms, their own logic, and ZUCA was actually had long setups. That can happen. There could be differences in within ECS depending on the trader. Now that could have a different view. EA can have a different view. EAs could be trading in a different way. Okay, so that's something, of course, that is something to be aware of. Those things can happen. But the great thing is that even though that the long setups were obviously in a floating loss for a while, the targets to recover out of floating loss were just hit. So that's great news, and we'll do an update on that in tomorrow's webinar with the automated trading webinar. And you can see that there are other ways to trade, obviously, than manual Elliott waves. There's also systems like ZUCA that do that for us without our decision making. So that's great, and we're happy that ZUCA is out of this drawdown. I don't think it was that major, but I have to check the data again. But we'll do that tomorrow. So if you're interested in ZUCA, of course, feel free to join through the profit share model or rent it. The advantage of the profit share model is that you don't have any upfront costs, but you do share 20 to 25% of the profit. Or if you rent it, you get all the profit, but you have the rental cost. So that's up to you. Just a great system, doing very well, steady 5 to 6% on average per month. So that might be something for you. Anyhow, let's go back to this Elliott wave analysis. So we were the 14th of June, and I was saying that this looks really, really good for a bearish break to the downside. That was somewhere in here. I already indicated, actually 14th of June, I was indicating that This will probably see a retracement because it's a wave 3. And why did I think this was a wave 3? Because this was very strong bearish candles. Most of these candles were bearish. I think all of them actually were bearish in this case. So the majority was certainly bearish. The candle closes were near the low. And thirdly, the bearish candles were quite large in size. So that's a typical 3 elements that indicates momentum. Okay. But eventually this momentum, of course, will get a pullback. So that's why we put the fib on this swing. And when 5 to 6 candles did not break for a lower low, which happened around here, there was a fair chance of a higher low and a bigger retracement or pullback as a part of a wave 4. Now that wave 4 remained valid as long as price did not enter the territory of wave 1, which was up in here. And it didn't. As you can see, the pullback went up to the 50 fib, but not into that purple line. So that remained valid. And price respected the 38, and then later on the 50 fib, and actually made a new impulse to the downside. So you see a kind of ABC pattern up, ABC, followed by momentum to the downside. So on Monday, I think we were pretty accurate in forecasting that there would be a retracement, and also pretty accurate that these fib zones, usually the 38, but in this case the 50, it could be anywhere between the 23.6, 38, or 50 could be the stopping spot for the wave 4. Usually that is the 38, but it could be the 23 or sometimes the 50 fib as well. In this case, it was the deeper 50 fib that stopped the wave 4, and we saw momentum to the downside. So when we did the video on Wednesday, which was somewhere in here, we saw that we did get the pullback. That was accurate. The pullback did not invalidate our wave 4. The pullback stopped at the 50 fib, and that we saw bearish momentum. Why? 4 candles in a row. Typically, my rule of thumb is 3 out of 5 to 6 candles. Usually 3 out of 5, I think. Nowadays, I use more. If there's 3 clear bearish or bullish candles out of a group of 5, that's momentum. So this was momentum. So we had momentum, correction, ABC correction, 50 fib bounce, momentum, first break below the 20 EMA. And then when we made the new video, we were about to close again below the 20 EMA. We had a correction after the momentum. So we had momentum, correction, bounce, momentum, correction. So that's why at that moment on the Wednesday video, I said if you get a second close below the 21 EMA and the support trend line, well, specifically the 21 EMA, then that is the second break is typically the best. We have everything aligned. We got 21 EMA below the 144, below the 233 EMA, and the 610 EMA is not aligned, but that's not really that important. The 144 is below the 20 to 610. But it has a bearish angle. So almost everything is aligned. Everything we want, more than enough, is aligned here for a full downtrend kind of breakout on this 1 hour chart. So if we got the second close, second break below the 21 EMA low, that would confirm the downside break. And that's what happened indeed. We got the candle close, I think maybe an hour or two later here. Price went sideways, and then the big drop. Now, of course, the fundamental news events, I certainly do not want to diminish its role, fueled this downside. But I have to also say that from my point of view, the technicals really look good for the bearish break, and I was as confident as I could be within the world of probabilities, let's say, of course, because everything is a probability, nothing is 100%, that this is a good bearish break and that there should be a good bearish swing with momentum. And I actually indicated that there was a fair chance that this could be a wave 3, a fair chance that this actually could be a very strong price swing. I wasn't 100%. I was quite confident, of course, about the fact that there would be a bearish breakout, and quite confident that if there was a bearish breakout, that could be an impulsive one. As I said, within the world of probabilities, I was as confident as I could be in that particular analysis, and that did play out. So it's always a nice feeling, of course, when that happens. So I was quite happy with that. Made some profit as well on a trade like this, and of course, I'm human too. Wish that I maybe I had more profit from this, obviously, but those are things that happen. You gotta take your trades step by step, and you don't want to over risk either. So, but that said, I was able to catch a bigger win because, of course, it made a deeper drop, which is great because it's a wave 3, and it moved swiftly. Now, sometimes these news events, they help as a catalyst for technicals that we expect, or that's the feeling I have, at least. Most of the time, they support my particular wave analysis, but not always, right? Of course, logically, but most of the time, I have a feeling they do. So let's take a look at the 4-hour chart. So rewinding a little bit, and once again, I'm only doing this, obviously, a little bit happy with this analysis and how it played out. And I hope you'll forgive me for that. Obviously, I think being happy is nothing wrong with that. But most importantly, I'm doing this so that we all learn from these events to get more experience and use it for future cases and to become better. Right? That's always our goal. So. As you can see, so from a SWOT perspective, the key break was the second break below 20 EMA low. That's what I tried to explain in the video. The bigger picture on the 4-hour chart was the fact that on a daily chart, we were looking at an ABC down and an ABC up, and price reached the 88.6 FIB resistance. And with the ABC down and ABC up, we expected a wave C down, as part of a bigger ABC. Or even if it's a bearish 1, 2, 3 rather than a bearish ABC, it's the same thing. We would expect to bounce in both cases at these fibs. So when price made here 1, 2, 3, 4, 5 candles, 5 to 6 candles, not breaking for a higher high, that's a time pattern on the daily chart with the HMA down, with the divergence between these tops and a kind of a rising wedge, that a bigger bearish reversal might be taking place. So also, if we look at the 4-hour chart, that particular fall, just trying to give you all the pieces of the puzzle and the context at the time, so we can learn from that. 5 waves down, 1, 2, 3, 4, 5, followed by ABC up. Then we got a downside, but this downside was in 3 waves. So it would probably indicate that the correction was not finished yet. And as you can see, if we put the fib on wave A, this particular swing did not break below the 138.2 fib. So this ABC is probably a wave B, and the upside was a wave C. So what happened was we had an ABC here, but that did not complete wave 2. We had a 5 wave down, an ABC up, but that was not finishing wave 2. It was a wave A, an ABC and A, an ABC and B, and then a wave C to finish wave 2. So we have 5 waves down for wave 1, ABC for wave 2, and then we had basically momentum followed by pullback. And this is what we saw on the hourly chart here, followed by momentum. So with this flag pattern, so we were looking at this breakout here. We were looking at this momentum on Monday, saying a pullback is likely, and then on Wednesday, it's saying a breakout is likely. That's this part. The context was 1, 2, 1, 2, 3, 4, 5. Now, we said that if it breaks below the minus 61.8 target here, and with 6, that it's likely a wave 3 rather than a wave C. Because at this moment, we're not sure if this is this is a 5 wave. It could be wave A, ABC for B rather than 2, and the down for C. So in that case, it could just easily go towards, the minus 61.8 target here at 120.50. And bounce, for instance, at 120.50, and that would be a wave C. So with the break below that level, it started to become more likely that it's a wave 3 rather than a wave C. And as you can see, price reached all the way down to the minus 200 target. And when, of course, it breaks through the minus 61.8 target and reaches the minus 161.8 or even the minus 200 target in this case, then it's likely a wave 3. So this is a likely wave 3. So that means that with this breakout and this candle, it was indicating a wave 3 rather than a wave C. So in that case, with such a breakout candle, we can try to, if anyone traded basically this 1 hour breakout or the 50 pip bounce or any of those two basically, then with such a candle, that means you can hold on for further targets like the minus 161.8 target, or trail stop the candle highs. Or you can even, when such a candle occurs, look at lower time frames to scale in for a push lower, because in this case, it's likely that the momentum will follow through with more downside. So on the hourly chart, right about here, this fracked out break could be a way of trading SWAT Pro for further downside here, with a stop loss at the 21 EMA low for further downside towards these FIB targets. All right, so the 50 FIB bounce, the breakout on the hourly chart, or even a continuation here of momentum, all possibilities to trade this wave 3. Earlier trades, well, I was specifically talking about last week, Monday and Wednesday, and this Monday's video. But the week before, you could have basically the second break below the 20 EMA. Of course, you can use the SWAT candles too. This is the first break after correction up. This is the second break. So this second break is looking good as well. Just before the wave 3 momentum occurred, could have been a good trade, or even this one. But you had to wait for some retracement to take place before the trade went in your way. These red candles, of course, could also be ways of trading it. If you're using the SWAT templates, this red candle, this red candle, this red candle, this red candle, all these four would have worked out fine for trading it. Now, on the outer chart, there were no setups after that. But on a 50-minute chart, of course, if you see momentum like that on a 50-minute world, there could be opportunity for trading it. No, not even that. We didn't only here at the end. Maybe a 5-minute chart would have it. Yeah, 5-minute chart had it here. Red candles after the pullback here for downside. But I would only recommend that if there's really strong momentum. So today I was saying that with the double bottom, the bearish impulse running out of steam, breaking beyond with 7, there's a fair chance of a retracement now. And that's what happened. I had made a video here. I took a small long position actually based on that against the trend, but it seemed likely that price will make a retracement back to, let's put the fib. At least about 119.50. So some retracement is likely, but if I look at the bigger picture, there's a chance of the downtrend to continue because in my view, now we're already looking ahead. It looks like a wave 3, and it looks like this could be a wave 1, 2, 3, 4, 5, and in fact there could be 2 more waves 4, 5. So there could be a wave 4, 5 that finishes a larger 3, and then another 4, 5 that completes the wave C. So there could be 2 or 3 more lower lows, maybe even 3, but I think 2 is quite likely at this moment. That price will stop around 119.30 up to 120.30 at the max, with most likely target to 119.50, 119.80 zone. That should be a resistance spot for more downside. There could be a triangle pattern and then break to the downside. So I'm slightly bullish, expecting a retracement. But after that, for the downtrend to continue, bounce 38, make a lower low, retracement, and then another lower low, and ultimately expecting price to go down to anywhere between 116 and 118, basically, with the most likely target probably being 117, 117.50. for downside. Now that would change, of course, if price were to show really aggressive bullish price action above the 50 fib here at 120.25. Then something else is going on, and in that case, I would consider my my bearish analysis for a reversal here, or not a reversal, but for a bounce within the downtrend to be incorrect, and something else might be going on, and that can happen just because, of course, it can happen anytime. But ultimately, of course, we want to measure our analysis and try to be right as many times as we can, and even if we're wrong, doesn't mean that we traded that, because my analysis could say I expect a bounce at the 38.2 fib, but if there is no bounce, if there is no candlestick pattern that confirms a turnaround there, even though my analysis is incorrect, if price breaks through that, I might not have a trade. So, of course, our task as trader is to have as accurate possible, our analysis to be as accurate as possible. But then furthermore, if it is correct, to make as much out of it as possible, and if it is wrong, to avoid losing, or try to minimize the losses as much as possible, right? Because there were some cases that, okay, here I was not right, but I actually didn't trade it because there were no confirmations, for instance, right? Such things. So now you cannot avoid losses, of course, that will always happen, but we tried our best, of course, in all cases. So yeah, I'm going to stick to the longs until it probably hits well, not anymore. I mean, I have one small position here open up targeting 119.70. I might not hang in that long. If I see any failure, I will exit that, and I would join the short side if I see bearish candlestick patterns, if I see time pattern hitting the 38. So if I see momentum up followed by 5 to 6 candles failing to break the high, that could be a higher low, or just a simple break below the 20 EMA low later on. But there's time, because this is a wave 4, so there's no rush. The price could build some lengthy wave 4 here before moving down again. So I'm not going to, I don't expect that it will happen too quick. So Wiz 7, the Wiz levels, of course, help us identify when we expect momentum. Price was already below Wiz 4 and moving all the way below these Wiz levels, indicating a lot of momentum here. So fibs, both the fib levels and the Wiz fibs, help identify when we might expect that momentum. All right. Are there any questions? I think that this is an interesting example and development of how to use our SWOT tools together with one's Elliott wave analysis, and hope that these examples help everyone use the SWOT course to trade and to analyze better. If you're not yet a SWOT member, then of course feel free to join it. You can join anytime. It's open for everyone. You can buy the SWOT ebook for just 24 euros or 95 cents, or become a SWOT member. So let me show you. If you don't have time for analyzing the charts yourself, then of course there's also automated trading. Ultimate EA, there's nowadays a bundle of Ultimate EAs from Mislav Nikolic, 3 EAs in one. Or ZUSIA, this is Ultimate EA is a rental. ZUSIA, you can rent or take a profit share. And was happy to see it move out of that drawdown situation. We can take a look quickly more on that. As I said, in tomorrow's live webinar, if you want to join for that live webinar to hear more about how the ZUSIA got out of that drawdown join here live. No, wait, sorry. Automated trading briefings is tomorrow around 11 a.m. Central European time. And yeah, I don't know if it's updated yet. Maybe not yet. Seems that yeah, you can see a floating loss here. That has been closed. The target has been hit. It just hasn't been updated yet. 1 hour ago. It's too fresh. We'll do that tomorrow then. But yeah, basically very steady gains, as you can see. Every month is a positive month so far, at least, and doing a great job. There are sometimes where there's a floating loss, but those are just almost always, or so far always, intra-month situations that do not end up in a closed loss. So that's great. So yeah, maybe something for you if you like, if you know, depending on what type of trader you are, maybe you would like to trade waves manually and combine it with SUSI or Ultimate or Ultimate. Up to you. All these choices are here for you to check out. We'll go through the SUSI tomorrow in more detail, and hope to see you as a SWAT member, SUSI member, or Ultimate EA member, of course, or all three. Wish you great trading and talk to you soon. Cheers.